5th of May 2020, 05/05/2020. Well, that sounds good. Piotr here, this is Light Forex Global YouTube channel. The US cash market is open. As you can see here, this is the first 5-minute trading range behind us. Of course, we are going higher. I'm going to explain in the details everything. So without a further delay, let's straight jump and start with the Nasdaq, and then we will switch to the FX crosses. All right, so what is all about? Well, it's, we don't have to discover America. We just have to check the Federal Reserve, New York Federal Reserve website, and we know what is going on when it comes to the market, money market operations, right? So for today, there is some kind of the POMO, permanent open market operation was scheduled. So since yesterday close, right, we've seen during the Tokyo session market goes higher. Also, we saw the rebound yesterday when it comes to the gap down open, right? So let's start with the daily chart, all right? So that's gonna be easier to explain. That was the weekly open compared to the weekly close. So that was the gap down, right? Immediately market and all the algos filled the gap and closed higher. We have the continuation today, which is the natural market expectations when it comes to the Fed, right? That's the first thing first. Now, during the day, we have to switch to the lower time frame. During the day, we have the sudden drop. The market, whoa, what is going on, right? What was that? It was the information that the German Constitutional Court votes 7-1 to reject the constitutional complaint against the ECB PSPP, right? So that was the huge move to the downside. That was the market reaction. But of course, market is driven by the Fed, and Fed is adding the liquidity, printing the money out of the nothing, right? Well, if you are going to try to print the money out of the nothing, or me, right, we are going to be jailed immediately. All right, that's so, you know, there is a good TV channel when there is a in relation to the those physician guys, when they are showing the different things, and there is always a description. Don't try to do it yourself. So, you know, it should be, when it comes to the central bankers, that it should be the information, right, on their website. Don't try to do it yourself. It's very dangerous, right? Anyway, guys, because I knew it, what might happen with the market may try to take the advantage of the liquidity based on the Fed operations, I closed my shorts yesterday. I wouldn't say it was very deep on the dip. When they starting to rise, I closed my short. Don't forget, you can monitor my live trading activity. Link is in the description. So if you don't believe, just go and check what I did, all right? So now still we are driven by the, you know, money from the Fed. So all those hot monies going upside. But I'm still, you can believe it or no, I'm still bearish. Short term, I might try to, you know, look around to try to find the opportunity to eventually try to join the party to the upside. But don't forget, one more thing. Yesterday, Fed said, we are almost ready to start to buy eligible ETFs in the early May. What they mean by that, or what's my translation, is that, well, they are ready to manipulate the market Thursday, Friday, when we have jobs data, US jobs data. We have Thursday weekly unemployment, jobless claims, and Friday we have non-farm payroll. So be ready, guys, be ready for the market manipulation. Anyway, so we see the cash market open, and upside pressure here, right? But let's have a look what we have from the higher time frame perspective, all right? So overall, that was the nice consolidation before we went higher and hit the high, right? So 50% of that consolidation after the breakdown been tested lately last week, all right? And we've seen the rejection, all right? The rejection is trying to hold the latest consolidation of latest rally, right? So I'm not gonna be surprised that we are going to try to hit more stops because we have one unfilled gap when it comes to the daily chart towards 9,200, 9,250, 450, all right? At the same time, we have the latest consolidation before we hit all-time high, right? So I do expect, that's why I'm still bearish, more manipulation to the upside eventually, and finally I do expect selling pressure to increase around the highs, all right? But as I mentioned, there is a quite long way there, so I'm going to look for some buying opportunity when it comes to the buying opportunity where I think that Friday low, right? So this is not going to be tested. So Friday low with the stops below yesterday low, that could be the case, right? From the money management perspective, it could be the case, all right? So that's how I see the things on the NAS. That's why I took profit on my shorts. Well, I'm not in rush for that longs. I'm not gonna chase the market. If they are going to make the pullback to my levels, then yes, I'm going to think about that. So that's how the Nasdaq looks like. Now, because of this German Constitutional Court decision, we've seen the weakness when it comes to the euro dollar, right? Now, one can argue, but we are rebounding. Well, we are rebounding because we have to close some gaps, right? I'm looking to add into the shorts around 109, 109.20 when it comes to the euro dollar, right? Still think we have to fill some gaps, and from intraday perspective, we are talking about the demand right below 108 or lower towards 107.70, 107.60. All right, that's what we discussed. That's how I see the things when it comes to the euro dollar. So this particular rally, I'm looking to fade here, or if we are going to see even higher rally, right, then we have something we discussed, another unfilled gap. That could be the case, guys, as well. That could be the case as well, right? So overall bearish and looking to fade any kind of the rally when it comes to the euro dollar. Also, if you remember, I prepared gold yesterday, right? As of now, we retest 1690 again, right? So these important levels, right, been retested again today, okay? I think if we are going to get the daily close below, that could be crucial. That could be crucial. So from the intraday perspective, I'm looking for a close below. From the medium-term perspective, as discussed yesterday, I'm still staying short, all right? And the last one for today, because it's a plenty of different things and I'm going to make the update if necessary towards the end of the day. Well, 65% higher or even more right now. Huge recovery when it comes to the oil. Of course, partially is a short squeeze, right? But if you remember, I've mentioned that the coronavirus case will open the door for even, some kind of the fraudulent things, right? So the first we faced, it was programs created in the US to help the small and the medium-sized companies, right? Immediately, some people found out that some money went into the people related with the President Trump, right? Like the one of his big donors, who is the owner of the big hotels chain, multi-billion-dollar guy, got some money, right? He said he is returning this money back, right? But you know, guys, you can always find some kind of the solution. So we've seen, if you are going to visit President Trump tweet, right? So we have another pump from the President Trump. Yes, demand is back. Come on, let's make the party. But it could be another way how to distribute some funds to your colleague, right? So don't forget about that. I wouldn't chase the market at all. The car registrations is dropping like the, stone or Niagara Falls or whatever you want to call it, right? That's the first thing first. Also, people are swimming in the oil, right? It's too much oil. Of course, some central bankers and investment bankers are saying that, yes, there is a light in the tunnel when it comes to the oil, right? Anyway, do your homework, check the President Trump Twitter account and the latest pump tweet in relation to the oil. Overall, because of this huge central bank manipulation, we see some kind of the V formation is being created. Well, because it's not that I'm gonna be like 100% all the time against, right? But I think that second, third wave of the coronavirus is, we have to go through that, right? We are not even at the beginning of the recovery. So we have some huge disconnection when it comes to the economy and stocks market. Be careful. Of course, you don't want to fight the Fed at some point, but also you don't want to fight Buffett. He said that what Fed is doing, it's a very dangerous game. That's the one thing. And the second thing is that he said nothing attractive for him. He's sitting on cash. Guys, I know we didn't discuss, trading opportunities here, but we discussed many interesting things. Don't be trapped. Do your own research. Do your own homework and see you around. Have a good US trading session. Take care and see you around.